Welcome to the Ag Commodity Corner Plus podcast. Happy Friday. I'm on my own this week, so let's get started. The title this week is U.S. Crop Ratings Fall Plus Drama with China, but they're still buying beans and corn. So let's get into it. Here's your weekly summary quote chart. I've also added a column in here to show you the monthly move, because weeklies are important, but so are the monthly moves. And so you can see on a weekly basis, the funds sold off, took some profits. Look, ignore the noise. This was fund month-end selling. That's what they do. After a very good month of July and a very hot and dry July for most, finally, the forecast was showing some rains. I think that was a key factor late this week. Well, actually starting of the week, because it actually started on Monday, and it got probably wetter as the week went on. So, but look at the monthlies. Those are good closes on monthly, except for maybe oats. Corn was actually monthly higher. That should be green. Oats, new low, fresh new low there. And then we've got the NASDAQ 100 was down 2,100. It actually was into correction mode, about 10.7%, but it bounced late in the week. We'll get into why. And then we've got natural gas also at new lows down into this 2 point. Wow, this was your intraday. This is a new low, and then this was your intraday week low, weekly lows. So, okay, let's. This is podcast number 69. Don't forget to subscribe to the channel. So at the beginning of the week, we had these U.S. crop ratings come down, both corn and beans, more than expected, and so these brown spots here, including here, Texas, North Dakota, South Dakota, Nebraska, Kansas, all lower. And at one point on Monday, corn futures actually traded to 491. And 491 is a key pivot point that could take you much higher, get into that 504.5. That's your ceiling above that 491, retesting those May 13th highs. So we had a May 13th high. We get a second high on July 23rd, although corn did not participate with that second high. If you can break 504.5, you literally open up the door, because the 3-year bear market was $3.50 to $5. And now you're going to start to trade a new higher level with between 5 and 656. So this is your crop conditions, and you can see South Dakota and North Dakota, 50%, very poor, and fair. Literally 50%. Poor to very poor plus the fair, but also 50% good to excellent. So those are your problem spots. And then in the soybeans, sort of the same thing. You could include Ohio. And so did that heat and hot, dry weather really do a lot of damage? We'll get into that here in a second. But let's first of all talk about Ukraine. So that was driving the markets higher early in the week, and then we kind of we weren't able to hold those gains, and that was a little disappointing. So the other headline news this week that was driving wheat higher was the headline news out of Ukraine and Russia. On Monday, Ukraine was calling a UN emergency security meeting, looking for other routes to move their exports out of the Black Sea. Then we had headline news that Russia was going to weaponize their cargo ships. And then I believe late in the week, there were some attacks at a new port in Russia. And so now there's at least 3 ports in Russia that are off, no longer exporting, and 40% of the trucking is also offline as well. So that drove some volatility in wheat, trading higher. But by the end of the week, we sold off a little bit. Again, a lot of this is month-end selling, so don't try to think it's more than that, because that's all it was. D10 put out this chart this week, and so this is the amount of precipitation in the month of July. It's running at about 3.3 inches for the month of July. You can see here, this is 2014, and of course there's a 2012. So much lower than last year. So, crop with lower crop ratings, can we have a 186 bushel per acre on the corn? USDA is at 183. There's a lot of fund traders and analysts that are using these AI yield models, and they're still convinced it's 183 to 186. The USDA is going to be very slow to adjust, but I think the key difference this year is that finally I know the resources are tight, but maybe we get that October crop report that we didn't have last year, and by then I think you'll start to know whether we had some damage to these crops, because they'll start harvesting their own plots, weigh that corn ear, weigh those pods. In 2026, 3.3 inches in July. It's running about 89% of normal. The temperature is about 78 and change. It's a little bit higher than last year, but it's not as high as 2012 at 81.7. In 2012, we had 1.57 inches of rain in July. When it's below 2, you start to have issues with yield. It was below 45%. 1983, also one of those tough years. It was around 2 or lower, and it was below 60% of normal. Don't forget to try our program. We were talking about the raging bull market in beans heading into 27, 28. If you want that report, sign up. We provide an 8-week free trial. So hopefully you enjoy that report if you want it. My concern is the soil moisture profile. So we're getting some rains, and there was some. The forecast is talking about rains starting today, last night, and into the weekend. And late breaking news suggests that 1/3 to half of Iowa, western Iowa, did not get any rain. The next rain event for maybe Iowa and some parts near Iowa is next Wednesday, Thursday. And this is your heat stress map that anything above 140. So you can see here in the red, this little line here. Once you get above that, you accumulate heat stress over time, it starts to impact yield. So anything in the blue is still okay. But we still got a long ways away, and I know the market sold off because of this rain event this weekend, and again it was month end. But you're gonna need more than one rain event to fix this, so we'll have to wait and see. Long term, as you get the weather also, the temps also got cooler, but as you get into the week 2, 8 to 14, this is through September 1st. A little bit wetter here in the far eastern corn belt, but bone dry in the central, Illinois west. So we'll have to wait and see. The heat wave does actually return in the second week as well. So this is that rain event that everybody's been talking about. So far, it's been disappointing. We'll see what happens on the weekend. And so the drama with China. We had a bunch of headline news that was really upsetting China, but they were still buying the beans and corn. I got some breaking news here late on Friday after the market closed. So one of the pieces of headline news was the fact that Trump increased the tariffs to 60 countries for using forced labor. And that increased China's overall tariff rate from 10 to about 12.5%, and they were not happy. The other headline news was that China was selling weapons to Iran. If you go back to when they did the trade deal around May 15th, I believe Z told Trump that you should have never started this war and it shouldn't continue. And I'm assuming Trump said, well, as long as you're not sending weapons to Iran, we'll get this thing figured out. But and then so there's a lot of geopolitics going on here. And then finally, Trump and the U.S. administration decided to ban humanoid robots. And again, 4 of the top world humanoid robot companies are from China. Tesla's ranked number 5. So China was not happy with that as well. So, but late breaking news is that China was buying 8 cargoes of beans This is after the market close from the Gulf, and first time in a long time, 6 cargoes from the PNW. Look for that U.S. basis in the Northern Plains, PNW, to start to go up. It has been narrowing here lately. So on Monday, I think these markets are going to start to bounce because of the disappointment with this rain event, because of this breaking news that China is buying more beans. So 8 cargoes from the Gulf, 6 from the PNW. This is your soybean tracker. And I apologize if you saw a soybean tracker from us in past podcasts with a 6 in front of it, is because I think we were double counting. We were counting both the daily flashes and the numbers, the sales within the weekly export reports. So we fixed it. Remember, so China is closer to 2.7. If they bought the 8 and 6, you're probably closer to 4 million metric tons. They're well on the way to meeting the 25 million metric tons. Unknown, we think, is China. They're at 2.829, so the total is 5.6. And then we started creating a corn tracker for China because this week in the weekly export report, 1.323 million metric tons was sold to unknown. And again, we think that is China. We think China will buy 10 million metric tons sometime between now and the end of the year. So this is your December corn daily futures chart. Very disappointing because it broke a key support at 469. Now, if you break 469, this could trigger further selling, and then within, as you enter harvest. And so 3 to 4 months from now, you could hit 415, which is a long-term support. I'm not in that camp. I don't think that's going to happen because of the weather, because demand is very strong. And at some point, I think the USDA is going to have to lower the yield below 183. We think it's below 183. We think it's below 53 on the beans. And so look for this to bounce, come back for a dead cat bounce back above that 469 on Monday. And then this is your November soybean futures chart for 2026. No damage done. Disappointing we couldn't hold on to the early gains. But you can see here, this is your long-term 2.5-year bullish upward channel trend. We're within the middle of that channel. There is a little bit of support around that 1175. You could have argued that 12 was a support as well, but we weren't able to hold that. But I think we'll trade back to 12 on Monday with that late breaking news with Chinese purchases. And then there was some headline news that, we may see a farm bill next Thursday and E15 may get approved. So remember, that's bullish for 2027. It could add as much as 200 million more bushels of demand. And there was breaking news this morning that Hamas is looking to disarm if Israel approves and withdraws from Gaza. This could long-term be positive crude oil, although crude oil did close a little bit higher. But maybe this is the beginning to the end of the de-escalation within the Middle East. And then we talked about earlier that the NASDAQ was down 10.7%. But part of that was because the South Korean Kospi stock index was down 44% in 40 days. The story is that, and if you look at this chart, AI stocks surge on demand capex. Kospi hits 50% year-to-date gains. South Korea becomes the 6th largest stock market in the world because there's 2 stocks called SK Hynix and Samsung. If you know anything about AI, there's a memory chip storage. We've talked about this with Micron, and so they compete with Micron in the U.S. And I guess the South Koreans can't afford, especially the younger crowd, can't afford real estate. It's very expensive. Deja vu. It's the same in North America for the young crowd. But I guess they were selling insurance policies and doubling down, tripling down. In other words, they would buy SK Hynix and Samsung, but they would go borrow money to buy twice as much or 3 times. Well, when things are going well, it's fine. But when things are going bad, the margin man comes calling. So never borrow money to invest in stocks or commodities for that matter. And so 500,000 investors were wiped out. And I think that spilled over into the U.S. market. And that's why the NASDAQ was down 10.7. And that's why some of the chip stocks and AI stocks in the U.S. were down as much as 40, 50%. But remember, keep things in perspective. In the first 6 months of this year, some of those stocks were up 6, 7, 800, 1,000%. Micron, I think in the last year is up over 1,000%. So some crazy headlines this week and some volatility both in stocks and commodities. And so to end the podcast, the CFTC report showed more fund buying across the board, literally. So you can see here from the chart, they've added to their positions versus last week. They're still not record long from May of this year. And I believe in real time after this week's month-end selling from the funds, we've probably, this shows that they're long about 750,000. In last week's podcast, I thought they could be long about 700,000. And so I think we're maybe back to 650,000. But they're still very long the grain and oil seed market. Thanks for watching. Have a great weekend, and we'll see you next Friday. Bye for now.